Sullivan. I'm a former IRS agent and teaching instructor with IRS. Welcome to my YouTube station. It's the home of the 5 minute or less video. I know what I'm talking about, and I can effectively communicate my message to you in 5 minutes. I've worked about 10,000 cases. I'm a national expert in IRS resolution. I have a huge Facebook following of professionals only. And I started this station for 3 reasons. So you can be informed, I can educate, you won't be ripped off, and you're going to have inside information on how IRS looks at cases. I've been doing this for 50 years, and I have a whole team of former IRS agents. You'll see my description down low on how to contact us if in fact you need us. So today I'm going to give you an educational video, more instruction on what you need to know and how to move forward. There's 3 different ways IRS are going to close cases with you while the case is in the IRS enforcement portal. If you want to know when you're in the enforcement portal, it's in the billing cycle, in the billing notices. When you first go ahead and send in your tax return and IRS sends you your first notice, your CP14, you're officially in the billing cycle, and that assessment with IRS is going to last 10 years. So IRS has to find a way of closing that assessment off the books of the IRS. And there's 3 basic ways they do that within that 10-year period of time. First, they'll either put your, let me just back up. IRS is going to want a current financial statement on you. The only way to assess your case and for IRS to assess it is looking at a financial statement. There's 2 general forms IRS uses for that. The 433F, which is used by the service center, and the 433A used by the local revenue officer. I was a revenue officer, so that's the form that I would look at. With that, IRS expects that form to be documented. So how are they going to close your case? Take it off the enforcement computer and be happy with this case. After they look at your financial statement and see the documentation that supports it, such as pay stubs and bank statements and expenses, they're either going to put you in a currently non-collectible or hardship, which lasts there about 2 or 3 years, and they bring the case back out into the field. Penalties and interest do run. They'll grab your refund unless you change your W-4. Hint, hint, change your W-4. IRS will entertain a payment agreement. There's a couple types, depending on how much you owe, how long you want to pay them. I can discuss that with you. Or you may be able to settle your debt through the offer and compromise program. I was a teaching instructor for the offer. I used to accept and deny offers. So it all depends how your financial statement looks, how IRS will determine how to close your case out. So the best way for you is to understand what is IRS looking at that financial statement. What are they really looking for? They're looking at assets, liquidities, they're looking at income and expenses. And that's how IRS is going to judge your case. You should know the most important thing that you need to know is that IRS has a national standard program that says how much they're going to allow you to live on. The best place to find this on is if you look at the IRS 433A. If you have to, stop my video and pull up the IRS form 433A. Not the 433 OIC, the 433F, the 433A. You will find on the expense side that IRS is only going to allow you X amount of dollars. IRS has a national program that they are going to dictate to you what goes in food and clothing, what goes in housing and utilities, what goes in car expense, and what goes in ownership cost. They're going to tell you what you must spend within that. Once you go over that, IRS is going to want those overages go to them monthly because they're not going to allow them. So when IRS looks at your case and you're under the national standards, they're going to put you in the currently non-collectible, and your case is going to sit there for a couple years, and IRS will birth it out again. IRS will then look either into a payment agreement, which you can make online for 6 years if you want to do that, but how do you figure out what your payment will be if you want to pay it off? IRS has an amortization schedule to do that. If you want to do an offer and compromise to settle your debt, I want you to know what the cardinal rule is. You must go ahead and give IRS your total liquidity for your base offer. What does that mean? If I were to add up the equity in your home or your pension and your car, and that comes out to $100,000, you are not going to settle your debt for less than $100,000. They discount your home 20%. So anyway, at the end of the day, those are the things you need. Your case is either going to close by hardship, currently non-collectible, by payment agreement, and also by currently not by offer and compromise. By the way, you can file a bankruptcy, a Chapter 7, if the taxes are 3 years or older. You can qualify for a Chapter 7 and discharge the debt. And by the way, once your taxes go over the 10-year period of time, IRS will write your case off because the statute has expired on that. We're available for consultation, representation. I hope I gave you the information if you need. Give me a subscription only because YouTube values that, and so do I. It helps me out a lot. If you need me, look at the description section below. You know how to contact me. I love comments. I love answering your questions. Stick them in the comments section. I'll get back to you probably within a week and get you the answer to your question, hopefully. Thank you.